Good afternoon, everybody. My name is Jennifer Ropiak. I run precious metals derivatives on NYSE Life US, the US Futures Exchange of NYSE Euronext. Today I'm on the trading floor with Stanley Dash. Stanley is Vice President of Applied Technical Analysis for TradeStation. Stan, what is technical analysis?
We use the term quite a bit these days, and it's important to get an understanding of where it is and put it in its proper place. A technical analyst looks at the market statistics around trading to make judgments on the market and risks about the market as a whole, individual stocks or individual futures. So a technician looks at price, time, volume, those trading statistics, rather than looking at balance sheets and income statements, which is what a fundamental analyst would look at. Technical analysis is really properly termed a theory. It's not a fact, we can't prove it, but if it's an operating theory, and if you study it a little bit, and if it works for you in your trading and helping you find trading opportunities and manage risk, then it's perfectly applicable.
What about a trader who's been trading stocks, using the fundamentals, is considering switching to the futures space? Does he need technical analysis?
Well, I think technical analysis has become pretty well accepted in stocks and certainly in futures. And certain famous technicians have made their way from the equity side, and many have come through the futures side. So it's applicable to both those markets. You know, it's kind of interesting, Jennifer, in many ways, even those who don't use technical analysis are already using at least some technical analysis. The moment we look at a chart or have a conversation that says something like, gee, we're breaking out through a new high level, or gee, did you see the spike in volume on that sell-off? That's really the terms a technician would use, even if you're not fully adopting that. So it's probably much more integrated into the common way that people comment on the market and do their analysis already. So even if someone is resistant to looking at technical analysis, it is a part of our environment.
Thanks. And what about the trader who's trading equities? What are some of the differences that he needs to be aware of when he starts trading futures?
I think the main difference in doing technical analysis specifically between stocks and futures is not in the indicators, it's not in the calculations, it's really in the data and understanding the nature of the market. For instance, futures markets are open almost 24 hours, varying from roughly 18 to 22, depending on the market. So there's different hours to deal with. That's one of the main things. And of course, futures contracts come to maturity every quarter or every other month, depending on the market you're looking at, which means that the active liquid life of each individual futures contract is very short. That doesn't make much of a chart. So a futures trader has to deal with how do I string together data properly in order to see longer term histories. How do I understand the rollover when a March contract rolls, we begin to trade the June futures, let's say, or similar in any market. How do I make sure my numbers match up, and how do I connect all those data points?
If I am looking at trading different markets, am I going to have different indicators for different markets? Do traders have favorite indicators for different markets, or is everything applicable across markets?
Yeah, it's a good question. I would say that they're more generic across markets. And there may be exceptions to that and some nuance in there. But I think that the indicators you use and the way you do the analysis is more based on your style of trading, your time horizon. Am I a day trader? Am I a longer term trader? We have to adjust for the data, as I said, rolling over in futures, the length of the day in the futures market. But if I'm a day trader, the kinds of tools I use would be the same regardless of whether I'm trading a stock, an ETF, or a futures contract. If I'm a longer term trader, they're pretty much the same as well. So I think the indicators you use are not based on the underlying asset you're trading, it's your style, your time horizon, and the part of the price action you're trying to capture in your style of trading.
What if a friend asked you for a couple of books on technical analysis? What would you recommend to him? What's on your shelf at home?
Well, any book by John Murphy, who is certainly one of the fine technicians we've known for many years, who's written some wonderful books about technical analysis. Wells Wilder did cutting edge work, specifically in the 70s and 80s, but his books are still around. Perry Kaufman has some great books. So I said Murphy, I said Kaufman. I'll also mention Martin Pring. His books are excellent.
Okay, great. Thanks for coming to visit us today.
Thank you.